If I had just $1,000 to put into a crypto portfolio today, this is exactly how I'd split it. This portfolio gives you a strong foundation in majors, exposure to key narratives, and a smaller, high-risk bucket to swing for outperformance. This is the core 80% of the portfolio, which acts as the foundation. This is the bedrock covering the hottest narratives in the crypto market without moving too far up the risk curve. These are the high conviction plays that are important to nail because they make up the majority of your portfolio. I have 7 coins to go through and I'm gonna give you the exact suggested weightings for each. Keep in mind, this isn't exactly how my personal portfolio looks, but if I had $1,000 and I was wanting to build a crypto portfolio, this is likely the portfolio that I would build. Now, just as a reminder, before we get into the 80% of my portfolio here, make sure you subscribe to the channel. This is a brand new channel, Crypto Edge, which is dedicated to giving you the edge in crypto with bite-sized alpha-packed videos. Let's get into things. Firstly, Bitcoin at 20%. Bitcoin is the king of crypto, and it's actually led the majority of this cycle for gains, so it makes sense that it comes in with the strongest allocation here. Secondly, Ethereum at 15%. ETH BTC has actually upticked for the cycle, and I think you could say with confidence that ETH BTC has probably also bottomed for the cycle, meaning that from the current levels to the cycle peak, ETH is likely to outperform. Thus, we want to go in with a pretty heavy weighting compared to our overall portfolio at 15%. Remember, if you can't pick an altcoin that's going to beat Ethereum, well, at this stage in the cycle, it's probably just best to bet on Ethereum. Next in the portfolio, I have an alternative L1, which is showing strong signs that it's the next rotation after Ethereum, and this is Solana. I'm going to go with a slightly riskier weighting here of 15% because I do believe out of all of the blockchains in crypto, Solana has the best case to flip Ethereum. Solana has very strong fundamentals. It dominates for DEX volume, it dominates in the retail segment of the market, and those fundamentals justify the heavy weighting in my portfolio. And towards the end of the cycle, we know retail tends to go more risk on, and Solana is the blockchain where a lot of that speculation and gambling has been happening over the past couple of years, and I don't expect this time to be any different. All right, now we've talked about the L1s. I'm gonna move into an ETH beta now with 10% of my portfolio, and this is Athena or ENA. If you guys don't know what Athena is, it's a stablecoin protocol with one of the fastest growing stablecoins in crypto, and it's also highly reflexive to the market because stakers can earn more in positive funding environments. Positive funding environments are more likely to occur during a bull run. But there's been an interesting shift on ENA, which justifies, in my opinion, my portfolio weighting here in recent times, and that is the accumulation of ENA that's happening on an institutional scale. So stablecoin X, a treasury protocol devoted to accumulating ENA, has raised $530 million, which constitutes around 14% of the total ENA supply. To put this in perspective, this raise is the equivalent of Michael Saylor raising around $300 billion to buy Bitcoin, or Tom Lee raising around $75 billion to buy ETH. So not only does Athena have an extremely strong narrative with the rise of stablecoins and as being one of the top ETH betas, it also has strong underpinnings in terms of buy demand, which are going to add constant buy pressure on the token, hence justifying the portfolio weighting here. All right, now heading into the last 3 tokens of my core portfolio. The first one is Pump Fund. So if you believe Solana is the retail speculative playground this cycle, and you want exposure to that narrative directly, in my opinion, Pump Fund is the bet because it captures the upside to the speculation happening on chain, given the fact that it is the biggest launchpad on the Solana blockchain. Not only has its relative strength price-wise been super impressive in recent times, but it's actually 4x undervalued versus Hyperliquid when it comes to the market cap versus revenue ratio. Pump Fund's almost done $1 billion in fees this cycle, and even after the recent drop-off, is still doing tens of millions of dollars in monthly fees, which, when you combine with the regular buybacks that are occurring, put it in a really good position from a revenue perspective to be able to prop up the token. Hence why I think if you are betting on reflexivity this cycle, so more retail coming in at a certain point or more speculation, Pump Fund becomes an obvious proxy, and in some ways, due to the buybacks, is maybe even more obvious than holding Solana, but because Solana is a lot safer, captures the overall exposure to the Sol narrative and the treasury bid flowing on from Ethereum. Solana has a higher weighting in my portfolio at 15% versus Pump Fund at 10%. All right, getting into the second of the final three here, it's Hyperliquid. So I just mentioned that Pump was doing better numbers than Hyperliquid on a relative basis, but what I think is great about Hyperliquid is it's fully transparent. So unlike Pump Fund, which is a little more opaque, Hyperliquid is fully transparent. It's all on chain. They're doing a bunch of volume, and it's one of the strongest DEXs in the market, which has really started to rival centralized exchanges. I think it would be remiss of me not to have this in my portfolio. And if you want to swap it around with Pump, I certainly wouldn't hate having a 10% weighting to Hyperliquid either. It's a great asset and is one of my core positions for the rest of the cycle personally. And with a $1,000 portfolio, that would be no different. All right, now getting into the final token in my core portfolio before I get into the remaining 20%, which is the riskier basket of the portfolio, it's Mantle. The reason I have Mantle here is not only is it somewhat of an Ethereum beta due to it being an Ethereum L2, but it's also basically Bybit's de facto token. Now, Bybit, unlike Binance, doesn't have a token like BNB as the official exchange token, or OKX, which is OKB, or Bitget, which is BGB. But it does have Mantle, which has recently gotten a lot more utility on Bybit. To participate in a lot of the launch pools, you need MNT. To get discounts on trading fees, you need to stake MNT. Users are being rewarded in MNT. They're basically embracing it as the de facto token on Bybit. Now, Bybit is actually the second biggest exchange in crypto for volume after Binance. So if you want exposure, reflexive exposure to the amount of trading that is happening in crypto, obviously in a bull run, more people trade. It's only logical that there will be continued sustained buy pressure on the MNT token as people look for discounts on the Bybit exchange and also look to earn rewards. And a lot of the big whales, they actually are being pushed into holding and denominating more in MNT to get these benefits, especially these big institutions and trading desks. And the Bybit trading experience is absolutely amazing. It's one of the best centralized exchanges to use to trade. So a lot of funds trade on Bybit. This sets up MNT really well. And then of course, they also have all of the features under their L2, like Mantle Banking and their index fund, and all of these other things that they are doing, which only add to the narrative. So that is why MNT alongside Hyperliquid comes in with a 5% portfolio weighting. All right, so we've covered the 80% of my portfolio, but the 20% is really where you can make crazy gains. Now, the reason I structure 80-20 is because my core portfolio does the heavy lifting. It's slightly safer, right? Like Ethereum could do a 2-3x, maybe if we're lucky a 4x. I think personally that's a bit aggressive, but that's what it could do. Maybe a Mantle could more easily do a 5x. Maybe a Pump Fund could 5x in the right environment. But you're not going to get those 10 to 20 to 30x gains. The riskier 20% bucket of my portfolio puts me in a position to capture those gains without risking so much that I can wreck myself. The odds of me wrecking myself in that 80% basket are much lower because they are generally safer assets. But the odds of wrecking myself in the 20% portfolio are generally much higher because it's a much higher risk portfolio. So the way I view it is this. The 20% I'm almost willing to lose. I'm gambling with this 20%. You're going in, you're taking risks, especially if it's a $1,000 portfolio, you have to take more risks to try and get a leg up in the market. This is where you can be really stupid, but make sure that you pick an amount that it doesn't go over. It can't go and creep to like 40% of your portfolio, or you could wreck almost half your savings if you make the wrong moves. Now, I'm not going to give you the exact weightings for the speculative basket because honestly, I think you could hold many tokens here and they'll slightly change based on the period of the market, but I will give you a few examples. So the way I think about it is breaking it down in terms of sectors. In RWA, you have Syrup, which I like as an asset. You have Clearpool, which is also going to payments, which I like. Chintai is another one that I like in RWA. In AI, you have Robotics starting to emerge. Kodak is one of the leading players in robotics that looks promising. Pinlink as well is an AI RWA crossover play, which I think also looks promising. There are many others, and the point of this video isn't just to shill you coins, it's to give you some ideas as to the type of stuff you can position in. Look at RWA, look at collectibles, look at DeFi, look at robotics, look at these sectors which are hot that you can position in to potentially outperform. You're spraying and praying a little bit more than the core portion of your portfolio, but if you hit the right play with this remaining 20%, it can do some serious damage in terms of your overall portfolio returns. Now, I do want to mention some honorable mentions that I didn't talk about today. There are many tokens that I like, but I have to condense it down into this $1,000 portfolio for you. But let me give you a few more coins that you could consider adding and replacing other coins with. Tau. I think Tau is a great AI leading play, and I actually hold some Tau in my portfolio, but I just think narrative-wise right now, some of the other coins I spoke about are stronger. Fluid. Fluid is a great DeFi play that I like alongside Aave, but I couldn't find room for them because I don't think you should be holding 20, 30 coins in the market. So you should try and condense things down, and that's what I did for today's video, hence why I didn't mention them in the video even though I'm bullish on them. WorldCoin, I also hold a WorldCoin position, but for $1,000 portfolio, once again, we had to condense things down, so I didn't include that. That's another honorable mention that I like. Ultimately, you can pick your own coins, you can mix and match, but I hope now you get an idea as to how to frame risk in your portfolio. Of course, you also have the option of weighting differently. You could go 50% Bitcoin, ETH, Sol, 25% mid caps, and 25% small caps. But I do like the 80-20 rule in my head, just because I think it's a little bit easier to understand and it's a little bit easier to stick to. Once you get into these territories of like 50-25-25 or 50-20-20-10, it starts to blur the lines a little bit and it opens up potential mistakes because things get convoluted. Thinking about it as a core portfolio and a risky portfolio is a lot easier. And a lot of the trading in and out and the risky plays and the small cap bets happen within this 20%. And then you're using that 80% to ground your portfolio. So if you did enjoy this video, make sure to subscribe to the channel where I'm posting regular bite-sized alpha videos like this to help you succeed in the market. I'll see you in the next one. Let me know what you thought of this portfolio down in the comments below. See you later, guys. Peace out.